Hi, everybody. My name is Paul Gerard. I'm a student loan consultant, and I'm very pleased to be working with the American Dental Education Association, ADEA, to provide you with some information designed to help you do a better job of managing your student loans. This repayment module is on refinancing your student loans with a private lender and how to determine if refinancing should be part of your repayment strategy. Private refinancing is where a private lender or bank or perhaps credit union will offer to consolidate or refinance, in other words, pay off both federal and private loans. And in some cases, this will only be for private loans. In some cases, for some borrowers, this will only be for federal loans, or it can be a combination of these. And they're doing this with the promise of lower rates and substantial savings in repayment. Now, notice that some lenders are only offering this to borrowers of certain disciplines, including dentistry. The lenders have their own criteria in terms of who they will select and approve for refinancing, but that most certainly includes graduates from dental school. If you ultimately decide to pursue a private refinance loan, there are a series of questions we would encourage you to ask of any private lender you're looking at for your new loan. Ask about interest rates and capitalization policies. With regard to interest rates, look at the variable rates and look at the fixed rates. Now, you can expect the fixed rate to be slightly higher than a variable rate. That will depend on the lender. If you get a variable rate, you want to know how often the rate changes. That tends to be quarterly, but you want to verify how often it's going to change. And you most certainly want to know how much of a heads up are you going to get regarding the new payment amount that results from the rate change. That's especially important for budgeting purposes. Also find out, is there a maximum rate and is there a minimum rate that you can be charged if, again, you have a variable rate on your loan. Now, capitalization, as I hope you know, is where the accrued and unpaid interest on a loan is added back to the original principal amount. Once you're in active repayment, which is going to be the case on a private loan, this is not as important, but you still want to ask, are there instances that would trigger any interest you've not covered in your payment to be added back to the principal balance of your loan? So once again, ask about interest rates and ask about capitalization policies. Now, you certainly want to ask about repayment options, and the tendency is that the higher the balance on the private loan, the longer you'll be allowed to repay it. And the terms could be, for example, 10, 15, perhaps 20 years if the balance is high enough. So ask the private lender about the repayment term. You may also want to ask them if there are any interest-only options available to perhaps get you a lower payment starting out. This might also be very important for you during residency when your salary is lower, if you are interested in refinancing and starting repayment in your residency program. You might also ask if there are any repayment options that are tied to income. As you know, with the federal loans, there are multiple repayment options that are income driven, such as income-based repayment, pay-as-you-earn, and revised pay-as-you-earn. You may want to ask if there are repayment options for your private loan tied to income. In all likelihood, there will not be, but you might want to ask anyway. Also ask about postponement options. First of all, ask if they're even available, and if they are, is there a fee to postpone your loans? If you're allowed to postpone, you want to find out, does that trigger capitalization, where the accrued and unpaid interest is added back to the principal? And you also want to know about postponement, how that impacts the repayment term of the loan. In other words, how long you have to repay the loan. So very important questions about repayment options and postponement options. You may want to also ask, is a cosigner required? And even if a cosigner is not required on the loan, can you get a lower interest rate on the loan if you bring on a creditworthy cosigner? Now, if you do that, you also want to ask about what's called a cosigner release. That's the case where you have a cosigner on your private loan, and after a designated number of payments, you can apply to have the cosigner dropped from liability on the loan. So ask about cosigner requirements. Also ask about forgiveness provisions. Now, we're not talking about the Public Service Loan Forgiveness Program here. Only federal direct loans are eligible for public service loan forgiveness. We're talking about what happens to the private loan in the unfortunate event of your death or disability. Does the estate that you have, if you have an estate, is the estate responsible for repayment? Also, what about a cosigner? Is he or she responsible for repayment in the event of your death or disability? Very important to ask about those forgiveness provisions. You may want to also ask, are there some other services that the lender is offering as part of the loan that you may not really need and don't want to pay for? For example, we understand that one of the lenders may be offering some kind of unemployment assistance if you lose your job. If that's not something that you really need, be sure that the interest rate that you're paying is not accommodating a service that you don't really need. So once again, ask about cosigner requirements, forgiveness provisions, and other services. So, should you consider refinancing your student loans? Well, you may be a candidate if you have a steady income and are ready to enter active, perhaps aggressive repayment, and aren't really concerned about the need to postpone your payments at any time. You're done with school, you're done with residency if you are doing a residency program, and you are ready to start actively paying on your student loans. You may also be a candidate if you're not concerned about having an income-driven repayment plan like IVR Pay or Repay. Once again, you're ready to actively, aggressively start paying on your student loans. You may also be a candidate if you have no interest in the Public Service Loan Forgiveness Program. You may not be a candidate for refinancing if you need to be cautious with your loan payments and perhaps need a repayment plan that recognizes that and is a plan that is tied to your income. You may also not be a candidate if you're interested in loan forgiveness, including the Public Service Loan Forgiveness Program. And in fact, some private lenders will actually say that if you're interested in public service loan forgiveness, you are likely not someone who should be pursuing refinancing your student loans with a private lender. You may also not be a candidate if you think you may need to postpone your payments at some point, especially if you're doing a postdoctoral program, either a school-based program or a hospital-based program. So some takeaways from this short repayment module on refinancing. Private refinancing may be an ideal way for you to save some money in repayment, but once again, it's not for everyone. You give up the repayment and postponement flexibility on your federal loans when you refinance them with a private lender. If that's not a concern to you, then once again, as we just said, you may be a candidate for refinancing with a private lender. It may be prudent as a dental resident to carefully consider waiting to refinance if you're interested in refinancing until you start your practice or perhaps have some additional resources, because during dental residency, once again, especially in a hospital-based program when your salary is likely to be low compared to your debt, you may want to be sure that you preserve the repayment flexibility and postponement flexibility inherent on your federal loans before you consider refinancing. We hope this information has been helpful to you as you consider whether refinancing your student loans should be part of your repayment strategy.